All right, welcome to class 4 of the ICT 2022 Mentorship Remix. Okay, I think it's class 4. I may be mistaken, but of course I'll have it in the title, so you'll know. So we're gonna start with the 23rd, so Tuesday here, Nasdaq. We had a buy setup on this. Okay, so and I had a question the other day from an individual, and this individual was asking, Mike, can you trade the ICT 2022 mentorship model in London session? I get it. Like we understand you can do it in New York around the 9:30 equity bell, the morning session, the power hours, and all that good stuff, right? But can you trade this in London session? The answer to that question is yes, you can. Do I really like the stuff in London? I don't. I like New York better for futures. Why? Because more volume, and typically what comes with that is going to be better fall through, etc. But yes, you can trade it in London session. Like even this week alone, and this isn't just this week. I mean, we see it week after week. We see setups in London session that fall through really nice to give you great risk reward too, if that's your thing, if that's what you want. Not saying you got to look for a big risk reward, but it's provided to you if you want it. We see it. We see it day in, day out. And I'm about to show you examples of that this week. Okay. And how we approached it in chat. So, NASDAQ. Again, we're on Tuesday. So if you want to follow along, if you're watching this well into the future, then this is January the 23rd, 2024 that we're doing this. Okay. NASDAQ. What's the deal here? Well, what's the deal on NASDAQ right here this morning, guys? I want you to look at where my cursor's going, like back and forth. What is the market structure on this thing right now? It's bullish. It's completely bullish. And let me actually take it a step further. Let me rewind it a little bit. Okay. So it's bullish, guys. It's completely bullish market structure on this higher time frame chart. Daily chart, same exact deal. NASDAQ, it's 100% bullish market structure because it's consistently putting in higher lows. It's consistently making new highs. And also notice something here on the daily chart right here. We have a big bullish imbalance right here. That's a point of interest. Because these imbalances, again, they serve as a draw on liquidity. Because it serves as a draw on liquidity beforehand, but once price comes down to the imbalance, it acts as support. Because now price has efficiently delivered a portion of that price action. And that's what you have right here on the daily chart for NASDAQ right here. And then we have this imbalance that's going to serve as support. 4-hour chart. Now I want you to notice this right here. We had this pullback right here. Look at my cursor. On Monday. Price had a pullback right here off the highs. And it came down into, if you notice right here, we have a 4-hour bullish imbalance. Look at my cursor. Let me just note it real quick so you can see it, but I'm going to remove it afterwards because I don't want to clutter it too much. But right there, we have a 4-hour bullish order block that it comes down into. And what happens here is, because as I was just saying, it serves as a draw, sure, but it also, at the same time, serves as support when it's tapped into. So what price did here on Tuesday, or coming to, oh, this is on Monday, but it created that liquidity on Monday, and Tuesday gave us opportunity. But what we saw right here was it came down into that imbalance here on Monday, and it created liquidity. Okay? It created sell, because that's a level of support. Absolutely. And what happens as a result is, look how we got our lowest low in the middle, higher low on the left, higher low on the right. What is that? That's a swing low level. And in simplest terms, what a swing low indicates is price is finding its potential bottom right here. It's bottoming out. That's what it means in simplest terms. So it creates support. Where are longs going to be keeping their stops at? Because you always got to put yourself inside that mind frame of where are opposing market participants going to be keeping their stops? Where is that liquidity going to be resting? Well, I have this liquidity right here that was just created off the support. I have this swing low right here underneath. I understand that underneath swing lows, because it's a level of support, it's going to be sell side. We can anticipate that. That's a big level right there, guys. That's a higher time frame point of interest right there, guys. Look at that. Let's mark it. So that gives us something to work with coming into the very next day, which is Tuesday, the 23rd of January. So just like you do over with, it's the same, it's like price is price, guys. even though I prefer to look at futures in New York session because that's where it's most active, it's where you see a lot of the cleanest moves. Like the same way that I do with Forex, you can do over here with futures in London session. You'll get opportunities. Absolutely, you'll get opportunities. Okay. So, for example, we already identified that liquidity. You can see now I'm on a 5-minute chart at this point, but if you look right here, there's that liquidity that was created on a 5-minute chart. See that big price swing right there? That's what we were talking about. It created that sell side. That's also what? It's previous day's lows. What you need to understand is previous day's lows is a huge sell side liquidity pool. Huge, big liquidity pool. Okay? And may I remind you, at the same exact time, we have that daily bullish imbalance created as well. Notice that. Don't forget. That was the very first thing we did here. We marked that daily imbalance. We have a big daily bullish imbalance right here, serving as support. Very strong trend, very strong market structure, ramping up with aggression, with strength. We have that trend that is established on this higher time frame chart. We have that higher time frame sell-side liquidity that was created on Monday, serving as a point of interest. And now we have price coming into London session, which, may I remind you, is a key time for fake runs. Look at this. We get midnight right here. What happens? It kind of goes into a little consolidation, and then boom, it just pulls the rug. It sells off right here hard. It sells off hard right down into what? That's liquidity that it just created off that higher time frame imbalance. It comes down into the imbalance. It finds some support just to create liquidity that's going to frame our setup later. Okay? So we can see we get this move lower, and this move lower takes out what? Yes, it took out higher time frame sell side, but it also took out Asian session lows, which is a significant sell side liquidity pool. Look right here. That's Asian session lows. Big bucket of sell stops right there as well. So we take out that liquidity right there. We sweep that. We sweep the higher time frame sell side. Think about all the liquidity that you are taking out right here, guys. That is a lot, and it's overall bullish market structure here. The higher time frame is bullish. So what am I marking right here? What's right there? Well, that's buy side. So stay with me here. We're selling off, and we attack this. After 3 o'clock, we come to London session here, just like I do with Forex, and I start hunting for these setups after 3 o'clock. That's what I approach this futures with as well. Right after 3, we come down and we attack that sell side that we just created off that imbalance. We tap down to that daily, that 4-hour imbalance. But we also tap down to the daily bullish imbalance in this move lower right here. Okay, so it's taking out previous day's lows liquidity. It already took out Asian session lows, and it's coming down into a daily bullish imbalance at a key time where we can anticipate manipulation runs are going to occur, which is in London. Very beginning. Put the puzzle pieces together. Look at all that fucking support. Look at that. Look at how stacked it is. Look at the higher time frame levels. Look at the liquidity from Asian sessions taken out. Look at the daily imbalance right there. It's like smacking a brick wall. And you can understand when prices have this big move lower like this, because it is looking weak. If you're a trader that is solely focused on the lower time frame chart and you're seeing this thing move lower like this, it looks very weak. It looks like it's going to dwindle down into nothing, right? That's the intention. That's why you call it a manipulation run. That's why you call it a turtle soup. Okay, that's the intention of it. So it comes down right here, and it's taking out this low. What do you think a breakout trader that sees this is going to do? That's going short on this. Where do you think a breakout trader is going to keep their stop at? If they're getting short on this thing, where are they going to keep their stop? Use common sense. Above resistance. Well, then you have to ask yourself the question, where would the next key level of resistance be? What is resistance? Resistance is an area where prices failed to move higher in the past. Where's that at? Right there. That's high of day. That's the absolute high that was put in today before we saw lower prices that attacked this sell side. So knowing that and know it's moving lower here, we know there's going to be buy stops above this low. We can anticipate that because where the fuck else are they going to keep their stop at? Where else are they going to keep their stop at? Where are the majority going to keep their stop? Above that resistance. Above that, that's liquidity that's right there that's created on that move lower. That's the intention of this, is to create that liquidity because it looks weak. That's the intention of but because we're knowledgeable of what it's coming down into right now, we're knowledgeable that it's coming down into a higher time frame imbalance. We're knowledgeable that it's taking higher time frame sell side. We're knowledgeable that it took out Asian session low liquidity. We can come to the conclusion that this is a fake run. We can come to the conclusion that it's going to attack that opposing buy side. See how we put all this together, guys? It's not just, oh, go look, there's a little hot take and there's a little imbalance. Let me just take this trade now. It ain't that fucking easy. It's very simple stuff. Don't get it twisted. But you have to have that full picture. You have to have that full picture put together here. That multi-time, or not multi-time frame alignment, but you got to have that multi-time frame analysis here. You got to understand where you are in the grand scheme of things. Okay, you got to understand where the other market participants are at as well. Okay, and that's what we're doing here. That's exactly what we're doing here. So it comes down and takes that low, boom. What am I looking for at this point? Well, I want to see a shift in market structure because I want a reaction. I got to see price, because I want price to tell me. And it goes back to the ICT 2022 entry model. What do you look for? You look for the liquidity grab off, as ICT demonstrated at the beginning, the 15-minute swing low. Guess what? If you zoomed a 15-minute chart, you got a 15-minute swing low right there. There you go. Right there. Okay. And then what do you do next? You look for that displacement. You look for that shift in market structure after taking that liquidity. We've already framed it. We already understand now why it wants to move higher. We implemented time. We implemented our key levels. We understand why it wants to move higher now. Now I just need to see a reaction. But see, this is just like the final nail in the coffin is the reaction. See all that work that we did beforehand though? Nobody wants to do that though, do they? No, nobody wants to do that. Nobody wants to have that full perspective. It's just looking for a little imbalance on any single little move. And that's not, you got to have that full perspective. And so now this is like that final piece here. It comes down into our higher time frame point of interest. It gets to push up. Look at this short-term high right there. See that? Look at that swing, short-term high, highest high in the middle, lower high on the left, lower high on the right, short-term high right there. We get a close above that level right there. And look right here. What's that? That's a 5-minute imbalance. That's your fair value gap confirmation right there, guys. Confirmation. At that point where you get that confirmation, that fair value gap confirmation, the strong close with the short-term high, the whole deal, then you can start looking for higher prices. And as I was telling my mentees on this particular day, then yes, if you like the risk reward on it already, well, then you could literally mark it in. This is why it's called an ICT 2022 remix. It's not straight from ICT. This is like how I look at it. You can wait on the pullback into a discount if you want to. But again, I do like these candle closes as well if the risk reward's there. So for example, if you're going to at the candle close, and you're doing it like that, if you risk the low, well then guess what? That's 1.40. That ain't bad risk reward. If you want to go beneath the low of the imbalance, which is valid as well, look at that. That's over 2-to-1 risk reward. That's just going off the candle close. Like literally, as soon as you got the fair value gap, as soon as you got the close with that short-term high, you just market it in, right? You're stopped beneath the fair value gap low and you target, because you would want to target the next key opposing bias of liquidity pool, which is going to be this high up here. We've already established that. That's the next level of resistance that we want to target. That's over 2-to-1 risk reward on that. You didn't even wait on the fucking discount and you still got 2-to-1 on it. See what I mean? It's up to you what you want to do, but it did actually give you the classic ICT discount a little bit later. So you would have got it either way. I'm just kind of demonstrating both for you. If you want to wait on the discount, you'll get plenty of opportunities with the discount marketplace. Absolutely. Plenty. As you can see, pulls back. So again, we take our low to the high of the displacement. Look right here. Pulls back below 50% equilibrium. There's your opportunity to get in, and it comes down and rebalances that price action as well. See that? And think like if you were to get in on a discount, like say you waited for that retracement, right? Let's say you kept the stop underneath the fair value gap, which is valid, man. Remind you, that's the last fair value gap in there, so there's really no reason for it to move lower. Okay, and you can pretty comfortably say that if it was to break beneath that fair value gap, you can comfortably say that you were incorrect on the play. Look at that. Over 3-to-1 risk reward on that was available to you. Over 3-to-1 risk reward right there. I'm not saying you got to shoot for that. You could just shoot for the basic 1-to-1 or the 2-to-1, whatever you want to do with it, of course. Make it your own, but I'm just showing you that was there. And we were talking about it on Tuesday. And that was indeed in London session. It happens in London session as well, guys. The setups will happen in London session. So it's there for the take. It's there for the taking. Okay. And that's what we saw. That was what we saw in London session on NASDAQ right there. That was the discount. There's the push up. It takes the opposing buy side, which is going to be high day, the next level of resistance. It's that simple. All right. Now we're into New York session. We talked about London session, right? But let's talk about good old New York session. So we've already established that this trend is bullish here. It's a very bullish trend. Completely. Market structure is bullish. And what we saw here, again, because we found that low in London session that we were just talking about, you remember, we had that move lower. It took out this higher time frame sell side right here. And then we got this push up. Now this push up, it took out, yes, it took out high day buy side right here, which is a key significant buy side liquidity pool. But it also took out Asian session lows in the or Asian session highs in the process right here. See this? This is Asian session highs that we took out because we had equal highs up here. So it took out high day. It took out Asian session highs. That's a lot of liquidity. That is a major, major, significant buy side liquidity pool that is taken out. It's overall bullish, but when you take out a big liquidity pool like that, of course, you can expect some sort of retracement in the near future. And this is what I was hunting for in New York session because it's overall bullish. My bias is bullish here. I'm looking for higher prices. So you know what I did? Guess what you got right there? You have the liquidity that was just created from London session right there. Okay. You have that liquidity because it was simply created in London session off taking that previous low. And now we're taking out Asian session highs. We're taking out high day buy side. It wasn't really the most explosive push either. Like you can see, it was pretty lethargic overall. And let's go back to the, let's go to 5 minute first here. And you can see here, guys, after that push up, after it takes out the significant buy side coming to New York session, this thing just, it pulls the rug here. Right into 9:30, it pulls the rug. See this? Let me go to the 1 minute real quick. Look here. So as I've taught you already, a lot of times, 9:30 is a key time where you will see fake runs occur. Not always, but a lot of times, the run that you see, the first run that you see at 9:30, is moving in the opposing direction of where price really intends on going. Okay? So guess what? I have this kill zone that I'm operating within. I'm waiting on 9:30 to rolls around, 9:30 rolls around, and then immediately 9:30 is pushing lower. And I've already identified my key point of interest, which was that liquidity that was created from London session right here. Okay, that's a level of support. What is support? Support is an area where prices failed to move lower in the past. This was the absolute low that price hit on Tuesday before it had that big ramp up that took out this significant buy side. That's a big level, guys. That's a huge level, guys. That is a big. Did I mention a big level of support right there? Okay. So we understand there's sell stops right there. And notice right at 9:30, it immediately sells off the first move. All right. And I had a big pause right there for a reason. Think about it. The first move to take out that sell side right there, guys, that sell side that was created in London. The first move, I've already said, is it's a prime time for fake runs. So now at this point, what do you think I'm looking for? I'm looking for the classic ICT signature. I'm looking for that shift in market structure. I have this as my big level of resistance up here. This is high day buy side. So that's where we want to keep. And then you have 9:30. Equity highs is also resistance as well. But this is the next major buy side liquidity pool right here. And that's going to be high day. Okay. And it's overall bullish. So that's valid for a profit target. So let's see what happens. Do we got a setup? Is that a setup right there? Nope, not yet. Why? Why isn't it, Mike? You got a fair value gap right there. What do you mean it ain't a setup? You need to crack a short-term high. Do you see a short-term high in there yet that's cracked? We get this big move lower at 9:30. Yeah, we can anticipate it's probably a fake run, but it needs for a shift in market structure, which is what we're looking for at this point after we got the liquidity run, because you can see we have taken that liquidity. Again, go to the 15 minute here. Look right here. We took that sell side. Okay, it's overall bullish. 9:30, we're implementing time into the equation here, and we understand that a lot of times 9:30 is prime time for fake runs, and we're seeing that turtle soup lower immediately at 9:30, because that's what it is. That's a turtle soup. And now we want to see that shift in market structure, that confirmation after having this move lower. But it's not there yet. I need to see it crack a short-term high. Is it there yet? Nope. Patience. 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 Confirmed. So you can see we have a short-term high in there and it cracks above it, it closes above it. You have a confirmed setup at that point. Let me just remove this other imbalance real quick, because here's our confirmation. There's your fair value gap confirmation. You already got that earlier, but now you get the crack of a short-term high right here as well, which is what I like to see as well. And at that point, it's confirmed. And we were looking for higher prices on this on Tuesday. Okay. So if you got in this one, you may have needed to wait for a pullback. I don't know if it even gave you, because what I like to see is at the bare minimum of 1-to-1. Let's say you got in like at the close, right? And your stop would have to be beneath the low right there. And then your profit target, let's see. So you have to wait for a little bit of a pullback. Or me personally, right? I like to see at least 1-to-1. Okay. So I need a pullback. It pulls back. And it clearly gave you your 1-to-1 at that point. So you could, that's valid at that point. You could literally just mark it in right there. Again, it's not a discount within that range, and that's up to you guys. Again, this is a remix. This isn't an exact replica of ICT 2022. I'm telling you how I do it, right? And how I look at it. Okay. But again, if you want to wait for that discount, then you're going to get plenty of opportunities still, even if you wait for a discount, which you'll see you got it on this particular play. If I recall correctly, you got a discount on this as well. So it did give you that opportunity. So you can see it did end up pulling back. Boom. And it even rebalances price action completely right there. It completely efficiently delivered that price action. So think about this. How do we measure the premium, the discount, or discount? Look right here. Take your low to high of the displacement range. This is the absolute low of that displacement range to the absolute high. Find 50%. You could literally just put your limit right there. You get in. Let's say you got in like right there, right? And let's keep your stop, because your stop is going to have to be right here in this scenario. There's no other way to do it in this scenario. And what about for profit target? Well, that's kind of up to you. You could just, if you do wait for the discount, you do got the luxury of shooting for that low hanging objective being the high of the impulse swing, meaning like the high of like it put in, like right before, on that first push up, basically off that level, off that point of interest. You have that luxury of shooting for that because it'll give you 1-to-1. Okay. So if you wait for a discount, you have that, or you could, again, this is kind of comes down to the type of trader that you are and your style. You may just want to take partial right there and then move your stop up. But ultimately, you could shoot for this high up here. It's valid. That's almost 2-to-1. And that's waiting on a discount marketplace because you're aligned with the trend here. You're aligned with the trend. So now you can target the next key opposing level of resistance, because we understand above the resistance, it's going to be buy side. We have buy side liquidity resting above that level. That's almost 2-to-1 right there, guys, on that play. And of course, if you wanted your 2-to-1, well, then you just wait for a deeper retracement, which you got, obviously. It came down to this imbalance and allowed it for it. It allowed for that to happen. You got an order block right here as well, where it found its ultimate support off of. Look right here. There's your bullish order block. And it's actually a plus bullish order block because it took liquidity, significant liquidity. We have the imbalance. It's nested inside of an imbalance discount marketplace. A plus bullish order block right there as well that it comes down into. See that? Now, this thing did play around a lot. I will say it did play around way more than, for my liking, but it eventually did it. It eventually came up and it took out that buy side. It cleaned it out completely. But it definitely did take a while. It was doing a lot of chopping, a lot of chopping in here. And but it ultimately did it, guys. It was bullish. It took out significant sell side and it seeked the opposing buy side above. And that's what we saw on it, guys. That's what we saw on NASDAQ right there. All right, ES, we had this on Tuesday as well. So ES, you can see I kind of already have it marked off for you right here. Or first things first, so we can clearly see the market structure is bullish. It doesn't take a rocket scientist to see that this is bullish market structure here. It's trending up higher, putting in higher lows. It's consistently making new highs. So we can see this is a bullish market structure. But here's a key thing that we had recently right here. I want you to pay attention to this 4-hour chart. What do we have right there? We have a level of support. We have support down here as well, which it didn't hit. It didn't quite reach that, which is fine because we have another level right here. That was put in London session. Just like we had that ramp up on NASDAQ in London, we got this ES ramp up too, guys. So look, we have our low in the middle, higher on the left, higher on the right. That makes that a level of support. That was an area where price failed to move lower, and it had this big push up right here. Okay. Now, also a big bonus for this is we have that third candle draw right there. Okay. That's going to serve as a draw on liquidity. That's a very powerful draw, that third candle draw right there. Okay. And we had that draw left intact coming into New York, equity bell. Look at this. So we have that draw right there. I've already established that. I already identified that beforehand, that it's going to want to come up and take that here very likely here soon. And then I see price, same deal as I was talking about over there with NASDAQ. I see price Let me go in. Look how we're selling off here. We come down and we take out this higher time frame sell side liquidity here. That's a big level, guys. That is not some small level. That's a ginormous level. That's the absolute low of day right there. And it's, may I remind you, it's overall bullish market structure. It's not bearish. It's overall bullish market structure too. Okay. And let me see. I think because I'm not, ES definitely ain't quite as clean as NASDAQ in regards to the price action. It's kind of choppier, and I got to refresh my memory here on this particular day. Yeah, we got the 5 minute a little bit later. Let me go back to the 3 minute. All right, right there. There we go. So you can see right here, guys, we have that move lower. It comes down. This is where it actually attacks that higher time frame sell side right there. Okay. And I think we might have got a signature. Let's see. The 3 minute didn't give it, but let me see, because not for, I don't want to look too perfect here, right? I think this one, let me see, go to the 1 minute chart. If this would have provided an L, I mean, is that really a displacement? I mean, I understand this one over here isn't a displacement either, but it's on the higher time frame that it qualifies. But if you're looking at the 1 minute chart, even over here, that's just a complete mess. And even this doesn't qualify as a displacement. So it's hard to say that that's really a setup there. It's too lethargic. It doesn't have that explosiveness. But if you zoom out to a 3 minute chart, because that's what you would do in this scenario, if like the 1 minute like that just doesn't have the like the price action looks like that, then just zoom out. Zoom out to 3 minutes, zoom out to a 5 minute, and you'll get better price action to look cleaner for you. So you can see right here, we did end up coming down, taking out the sell side. We had a nice little push up right here, but it didn't give the proper confirmation signals. It comes down, takes out the low, but it's still in a deep discount. Okay, we're taking out a higher time frame sell side while operating within a bullish market structure. Okay. And then right here, it does end up giving us that shift. It does give us that proper confirmation. Look right here. You get your fair value gap confirmation right there. See that? And I believe, actually, we might have got that short-term high a little bit earlier, if I'm not mistaken. No, I think that's equal highs right there. See that? So it actually got the short-term high, which was right here. See that? Look at my cursor. See, I get the close of the short-term highs over here as well. Valid. That's a confirmed shift, and that is off of a higher time frame point of interest. Overall, the market structure is bullish at a key time. It's doing. Oh, actually, wait a second. Nope, it actually wasn't. My mistake, guys. Well, yeah, it held up, but I can't say it would be really a confirmed setup because it's past 11 o'clock here. It's in lunchtime hours. So I'm gonna disregard, even though it had like a monster rip up, not to appear too perfect here, right? It was technically outside the kill zone. It's at 12 o'clock, so disregard that. Okay, but I mean, it still makes for a good example, because if this was within the kill zone, right? Like say it was like before 11 o'clock. There you go. Discount marketplace, fair value gap off a higher time frame point of interest. It just did it a little bit later. NASDAQ, all that was fine and dandy, but ES, not quite that. It didn't quite give it to you. So, or within the kill zone, it didn't give it to you. Obviously, had really good fall through, and the thought process was correct on it, but that was the case. All right. I don't believe there was much on Wednesday, but there was a little NASDAQ counter trend trade short, because this thing's very bullish. As you can see, it's ramping up. It's very explosive, but it's in a deep premium, sure. So let me go back in here. Let me see. Yep, we did have a short set up on that. All right, so on NASDAQ, this is on January the 24th, 2024, and this was a short setup that we had at Equity Bell on this, right after Equity Bell. So this thing's very bullish, clearly. This thing's ripping up. It is consistently putting in higher lows, higher lows, higher lows. So if you're the type of trader which just wants to be completely aligned with the trend, then of course it's something that you just sit on. There's nothing wrong with that at all. It's actually probably your smartest decision, or not probably, it is. But just for the sake of studying purposes, right, and to talk about the thought process on this and why I did like just for a short on this particular day. So all right, let's do it like this, guys. So we can see right here, look at my cursor. Price ramps up right here. And what does it take out? Coming to Equity Bell here. It's very strong, absolutely. It's ripping up, absolutely. But it took out it took out this high buy side right here. See that? That was the absolute high day right there, and price had a pullback. It had a pullback into this range. It came down into this order block right here, and then it propelled it up to that next level to take out this high right here. But when we take out that high right there, that's buy side liquidity, that's resistance that it's pressing up into. Even with it being bullish market structure, that is a level of resistance. That is buy side liquidity, and it is in a premium marketplace when it's doing that, and it's pushing up and it's doing that. What do we got down below? Now, here's what I want you to do. I want you to put yourself in the mind frame of a long who is in this. who's looking for higher prices, who's trailing their positions, where are they going to keep their stop at? Goes back to what I was saying in the previous examples. Where are they going to keep their stop at? Not over there. I ended up, just kind of by accident doing that. That's not where they're going to keep their stop, obviously. Where are they going to keep their stop at, guys? Underneath support. Where's the next level of support? It's right here. So we took out this high. This level of resistance, buy side. And this is the last low that was put in before we took out that high. So we can anticipate that there's going to be what right there? There should be stops right there. There should be sell side right there. If you're a longer trend, where else are you going to keep their stop at? Where else are they going to keep their stop at? It's going to be underneath support. Where's the next major level of support? It's right here. That's the absolute low that was put in before we took out this high. So we can anticipate, put ourselves inside the mind frame of a long, and we can understand that they're going to keep their stop right there. And it's pressing up and it's taking out this high right here. Now we're going to go down to the lower time frame and we need to talk about time. What do I mean by that time, right? What is that supposed to fucking mean? Well, as I've said before, guys, what is a key time for fake runs? 9:30. There's several times for fake runs, as I've talked about in this series already. But one key time that you want to be hunting for turtle soups, which is essentially just fake runs in the opposing direction where price really wants to go, is 9:30 equity bell. So guess what? We came up and we actually took out that high right before 9:30 equity bell. But then if you look right here at 9:30, this is where this candle opens. What does it immediately do? Right into 9:30, it pushes up. It's looking strong. It's looking bullish. It's making a new high day. It's going ballistic. Breakout bars are all over this thing. And they're saying, man, it's going to the moon, right? Rug pull. The first move was actually to move higher right here. And it took out this high right here. And we've already identified the resting liquidity down here, which is the sell side. We understand that their stops are going to be right there. We understand we're into 9:30 at this point. Okay. And we've already got this push up. So it further baited in more longs. It further created more liquidity beneath this low right here on this push up. It took out this buy side already. And look right here. What do we got? You get a lower time frame, 1 minute shift in market structure. Now, as I said, this is counter trend trade, this one specifically, because this is overall bullish trend on the higher time frame here. But look right here. We have the fair value gap. We have the strong close beneath that short-term low. Confirmation signal right there, guys. And where do you think you'd be targeting, of course? Well, it kind of depends on your entry, of course. But if you waited on a premium marketplace, which it did give you right here, may I remind you, take a Fibonacci from the high of the displacement to the low of the displacement. It pulled up above 50% equilibrium. That's where you could enter right there. So in regards to a profit target, you could take the low-hanging objective, which would be right here. Never a bad idea, especially if you're counter trend trading, which is right here, the low of the impulse move. That's a valid profit target. Or you could shoot for this low down here, which is the next key liquidity pool like we've already identified beforehand. We understand there's going to be a bunch of people that are keeping their stops right here. That's liquidity right there that it's going to want to be targeting. So we have that, okay? And, let me actually put that back on there. So let's see what that would be. I know it's going to be 1-to-1 if you just target the low-hanging objective. So it gave you a premium, right? Let's say you got in 50% as ICT teaches in his mentorship as an entry. And then let's say you target this low down here. 1.32. Not bad. That's pretty good. It's valid enough. Or at least, maybe it isn't for you. Maybe, because I know some people only look for like 2-to-1, 3-to-1, or bigger risk rewards. But, I like to see at least 1-to-1. So it gave a setup. Excuse me, guys. It did give a setup. Pulled up into the premium, sold off, and it took out this low. Now, this is a very important point that I want to note here. Pay very close attention. Okay? It's because this is something that trips people up. I went over in this series already, but it's a big thing that trips people up. I'm going to ask you a question. If this was to come down, right, I want you to forget. That. Actually, let me rewind a little bit. I want you to forget that happened. We got to push up. If this price right here, it came down and took out this low right here. So I want you to imagine with me. Okay? I want you to imagine with me that this came down and it took out this low. And then we pull back into a premium. Is that still valid for a short setup? Enter among yourselves. Is that still valid for a short setup? It's not. It's not. Why is it not? Why is it not? Because that's exactly what gave this validity. It's because we had that draw there. Really think about this, because this is one of those big points that people mess up on. This is the big thing, because it comes down to understand where that draw on liquidity is. Okay, if that draw is taken, well, then you don't got a trade idea, and you don't got any reason for it to move lower at that point. Do you remember what I just told you a moment ago? This is overall bullish market structure. This is a bullish trend right here. This thing's ramping up right here. And now after it takes out this sell side right here, guess what you got? You got a potential stop run. It's bullish, guys. It's been ramping up. It is not showing any signs of significant weakness. Even on this move lower right here, it's just taking out sell side right now. So we're operating within a bullish market structure. We're taking out sell side liquidity. After it takes out that sell side liquidity, and if it's really truly wants to remain bullish market structure, which you should believe the trend until it tells you a different story, then it's going to do what next after that stop run's done with, and it's sweep that sell side. It's taking the sell side. It can now seek the opposing buy side, and that's going to be up here. So we came down, say we came down and we didn't have any pullback into a premium, and we took out this sell side first. It's bullish market structure. This is the thing you got to remember. It's bullish market structure, and it's taking out sell side while operating in a bullish market structure. The odds of it respecting that lower time frame range, remember, say it does this, because it takes out 15-minute sell side right there. It's bullish market structure. It comes up. The odds of it respecting that range are not that great anymore, because it took out the draw. That was that magnet for price. That's what gave this that entire validity, that counter trend trade setup. But if it was to take that out while operating within a bullish market structure, you're looking at it essentially a 15-minute liquidity pool versus a 1-minute liquidity pool. And the higher time frame liquidity pools typically hold more significance. And especially the case if you're fighting the trend. You're going against the tide. So you're fighting the tide. It's already taking out 15-minute sell side versus a 1-minute imbalance. That does what? What do you think that does? Also, think about it like this, guys. What do you think that does? It creates buy side above this high, because there's a lot of people that look for that. It creates that buy side right there. It creates the liquidity right there. Okay? And that's exactly what happens. And then it's going to want to come up, and it's going to want to take that level later on, that buy side it just created, because, uninformed shorts, they don't run. This thing's bullish, guys. It already took out the draw. The draw was right there. But, of course, it did give you a premium before doing that, so it was valid. Look, boom, premium marketplace before taking it out, valid. Boom, get in right there, take it down to the low, done with it. Done with it. You wouldn't want to be too aggressive with this because it's overall bullish. You're fighting the trend, okay? But I'm just showing you, because it makes for a very good learning lesson, and on liquidity as well, in regards to, the target and all that good stuff, right? So it takes out the liquidity, and you're taking out the sell side. It moves lower a little bit more, but then ultimately I believe it did ramp up, if I'm not, actually, open that, yeah, it did ramp up. So you can see, boom, exactly. It's bullish. It takes out that sell side. It has no reason to move lower now. It's overall bullish. It's taking that liquidity. So it wants to seek opposing buy side now because it's in a bullish trend. And it flows to the upside, and it takes out that buy side. Again, that flush right there just further created more buy side on that push, right? Now, actually, I do, not to pair too perfect here, right? If I recall correctly, I think I did like this for one last move lower right here. I remember talking about it on Wednesday, because we did have equal lows right here, but it was kind of a, then we got this little displacement right here as well. So I did want to see one more move lower, but I was ultimately bullish on this, and it did end up taking out this high right here. But that was the case, guys. That was the little counter trend trade setup that we had on that, and that's what we saw play out. Like, that's why price did what it did on the 24th. All right, now we're on the 25th of January 2024 here, Thursday, right? So we had a few long setups on this particular day. The NASDAQ, the higher time frame market structure is bullish at the moment. And one point of interest that I had noted right off the bat here, which just jumps off the chart to you, obviously, is going to be this higher time frame sell side right here. Because it's a higher time frame point of interest, it's a very big level right there, a very big liquidity pool. So, of course, you take out a level like that, we can expect some sort of retracement and may present us with a nice long scalp opportunity after it takes out that level. So I had that noted, first things first this morning. And then on this particular day was a day where we actually had another London setup. As I said, you get plenty of London setups as well. And I'll show you what that looks like, okay? And again, I plugged all this. I know it kind of looks like here, I'm just looking at this stuff in hindsight and cherry picking. All this stuff is called out in my mentorship chat, which is closed at the moment. That's not me promoting it, saying, the sales pitch, right? It's completely closed. I don't need any more students. I already have more than or not really more than I can handle, but I have my hands full, right? So, but I'm just kind of stating that just for the fact that I'm not just going in here in hindsight and just cherry picking stuff. I called it all. I called all this stuff. Am I right all the time? No, I get stuff incorrect too. Plenty. All right, I'm not perfect. But these are setups that are called beforehand here, okay, in the chat. So you can see NASDAQ here. This is on Thursday. So this is another London session setup right here. We didn't quite take out that higher time frame sell side on this one, which is fine. It didn't, like, there's other liquidity. Okay, here's the deal. And so here's the buy setup. We have what right here? What's that? That's low of day. What did I just tell you a moment ago? What is low of day? That's a level of support. That is the absolute low. Look right here. That is the absolute low that price hit before moving higher. That's the absolute low of the day. So of course, guys, that's a level of support. That's a key liquidity pool. That's a very popular place that traders are going to be keeping their stops at. So we have that as a key liquidity pool, and I had that noted beforehand. Again, I had all these levels. I had this level down here, that higher time for liquidity noted. I had this level right here, because guess what? That is Asian session lows. I had that noted as well, because that's a key liquidity pool. And you know what I do, guys? I don't predict. I don't know. I could say that with full confidence. Most people in this industry, they can't, because they got to be all big old smart guy, right? They got to know what they got to appear like they actually, you know, have a crystal ball or something. I don't have a crystal ball. I can say that. You know what I do? I set levels. I have these key levels of liquidity. I have these key levels of support, and I wait. I let price tell me what it wants to do, because it will. If you're patient, it will talk to you. It will tell you what it wants to do. It'll tell you if it wants to respect the level, and that's all I do. I didn't know right off the bat if it was going to respect low of day or not. It could have came down and took out Asian session lows. It could have came down and took out high of day sell side. It could have. It absolutely could have. Okay. And again, my job is not to predict, okay? My job is to respond based on the signatures that price gives me. Yes, I have these levels established beforehand, but I'm simply waiting, okay? So you don't need to know which level exactly it's going to do it off of. You don't need to know that, guys. Be patient and let price tell you what it wants to do. We understand that this is a key level of support. This is a key liquidity pool. We understand it's overall bullish, okay? We understand that it's in a bullish market structure, and we have previous day's highs up here. Why is that significant information? Because when you're operating in a bullish trend like this, price's main objective is to continuously run out previous day's highs. So another big bonus for this play is the fact that we're coming to the London session here, and we have previous day's highs, which is still intact, serving as a draw on liquidity that hasn't been taken. That's a very powerful draw. So I'm putting these pieces of the puzzle together here, and I have a key level of support. It's coming down into this level, may I remind you, after when? After 3 o'clock. That's when I start hunting for liquidity runs, after 3 o'clock. Just like I do with Forex, guys. Just like I do with Forex, after 3 o'clock, I start hunting for liquidity runs. It's the same exact thing with futures. That's all. Yes, absolutely, you can use the model in futures in London session. It's not just New York. I do like it in New York better, specifically for futures, because it's just more volume, typically, you know, cleaner price action. But still, it's the same signatures. It just, you know, it's a little bit more lethargic, a little bit, takes a little bit longer, of course. May have to exercise a little bit more patience, but it's the same signatures, okay? Now, I wouldn't even touch ES in London, right? ES just takes it to another level of just chop or slow price action. But NASDAQ, it's still all right. NASDAQ will still give you a little bit, it's a bit cleaner, right? It moves a little bit better. And so we have this NASDAQ right here, right after 3 o'clock, and it immediately sells off. We understand that this is a key time where manipulation occurs. Okay, so you can see it's like a full thing. We have to understand the market structure, right? We've already confirmed the market structure is a bullish trend. We've already confirmed that. Check. We understand where our liquidity is at. We understand where sell stops are going to be residing. Check, because we have low of day right here. That's a level of liquidity. Asian session lows. That's a level of liquidity. Higher time frame sell side down here. That's a level of liquidity. It's all levels of liquidity right there, guys. So I have these levels noted as points of interest. I don't need to know which one it's going to do it exactly off of. I just wait and I let price talk to me. I let price tell me when it's going to do it. And guess what, guys? It told you. That's price telling you what it wants to do. Is it going to be, are you going to be incorrect sometimes? Yes, you will. Prepare for it. You're going to have something that has a perfect bounce off your level. It's going to have the shit. It's going to have everything that you want, and it's going to pull the rug on you, and you're going to be wrong. Get used to it. That's part of being a trader. You're also going to be a professional loser to be be a professional trader, right? That's part of the game. Okay. But what is an edge? An edge is something that has a higher likelihood of one scenario occurring over another. That's all you need, and that's all you need in the marketplace. It doesn't mean 100% certainty, 100% win rate, but that's what an edge is, and that's what you got here. So with that being said, we implement all that stuff, the market structure, the liquidity, and time. Time is very important as well because we need to understand when that manipulation is going to be occurring. That's key too. Because if you don't implement time, well, then guess what? You get caught in a bunch of little fake runs. You get caught in a lot of fake out. You get caught. You'll see a lot of this like same signatures like this outside of these key times. It doesn't hold up again because time is important as well. So we take out that level at a key time into London, and boom, we get our proper signatures. That's what we want to see. We want that confirmation. We want that conviction, that strength. And that's what we get right here. We get our fair value gap confirmation. Boom, guys. And we got another one down here, obviously, as well. Now, is it ready yet? Nope, it's not actually. It's not ready. Don't jump the gun. Why? Why is it not ready, Mike? Because we need a crack of a short-term high. That's valid for a shift in market structure. You need a crack of a short-term high. Preferably a close above a short-term high. Okay. We got the fair value gap, but now just need to close of a short-term high. That's the fair value gap's already valid. I don't think we got it yet. Not yet. There's no close yet. So be patient. Pulls back into a discount marketplace right there. Okay, see that? But we still don't have any close. Oh, actually, wait a second. Nope, we still don't have any close yet. So you just got to be patient on it, guys. It's giving a deep pullback here, but you need the confirmation. Okay. All right, now we're pushing back up again. See that? Still no close. All right, boom. See that? Look right there. Look at my cursor. See how that candle closed with this short-term high right here? That's confirmation at that point. You already got the fair value gap confirmation. You got the strong candle close. You could literally, if you wanted to, you could mark it in. I think you had to wait for a little bit of a pullback on this one. If I do recall, I may be mistaken, but I think you had to wait for a little bit of a pullback to get at least 1-to-1 on this. But you would target this buy side because remember, it's overall bullish here, and that's the next key major buy side liquidity pool being high day. That's your next buy side. So yeah, you have to wait for a little bit of a pullback to get at least 1-to-1, which is fine. You just be patient. Okay. Well, actually, it did right there. See that? And it gave you 1-to-1. Valid. So I'll see the deep pullback right here beforehand, guys. But again, it didn't really give the confirmation though, so that wouldn't be a valid play. You have to wait for the confirmation of the short-term high first. So it gave you a little pullback, and it did give you 1-to-1. So if you like the candle close idea and you don't really absolutely need it, again, this isn't the exact ICT 2022. It's a remix. Okay, I'm giving you different options here. I'm showing you how I approach it. If you want to wait on the discount, you'll still get plenty of opportunities. Yeah, you'll miss some opportunities as well, but that's with anything. But this is based on how I look at it, this was valid because it gave me at least a 1-to-1. It already had the confirmation, and then I could target that buy side up above right there. And that's exactly what happened. It came up and it took it. And that's a valid trade idea right there. Again, overall bullish market structure, key liquidity grab, lower time frame shift, target opposing buy side. That simple. It's that simple, guys. Okay. Now what we're going to do is we're going to fast forward here to New York session. All right. So here we are. So NASDAQ. Now we got that big push up in London that we were just talking about, right? It pushed up all throughout London session here. And then we have this, I believe there was news on this particular day, but I don't think there was any type of setup after news on this day that was too interesting. Yeah, that was definitely news, but then it ended up pushing up, right? And we got that push up, right? So we got that really nice push up all the way up into equity bell here. Okay, so it's just trending higher. So what we do here is we identify, we have a key point of interest in there. Okay. So, because right before equity bell, we got to establish this. Where's our liquidity at? Where our key points of interest of support is at? That's what we need to do here. So look right here. We have this low that was put in like right before the, at the result of news. It made this low from the news right here. So that's the level where price failed to move lower. What does that make that? That's a level of support. There's going to be sell side beneath that level right there. So I'll still note it. I'm aware of it. And then I have sell side right here as well, of course. I note it. I'm aware of it. I don't know where it's going to find its bottom at, guys. I can admit that. Nobody fucking does. I don't care who you are. Nobody knows exactly where price is going to find its bottom. And you don't need to. You don't need to be a consistent, profitable trader. You know what you need to do? You need to be patient. You need to know, you know your key levels. You need to know when to be hunting. And then you simply wait. So we have these levels right here. And then guess what? We also have this bullish order block right here. That's a key point of interest. That is indeed a key point of interest right there. That's a bullish order block of support. Okay. And yes, we have the old highs. I count this separate. Me personally, I keep it separate. Like I see, we got the old highs in here. And then of course, some people would say, well, that's just part of the order block. I understand, but I just like to do it separate. And then also it's inside this imbalance as well. So you can see you have this inside of that bullish imbalance right there. And whenever you have levels of support like that inside of a bullish imbalance like that, it's a very sensitive price point. It's amplified. Think of it like that imbalance, it amplifies it. So we have these levels right here, and it is in a discount marketplace. If you take your Fibonacci from the low to the high and you measure that price range, see how it moved below 50% equilibrium right here, and it tested these levels of support in a discount marketplace. It rebalanced its entire price action on the 15-minute into a discount marketplace. The trend is overall bullish. So we've already established the market structure, the trend, the tide is flowing to the upside. Where comes the 930 equity bell? Remember, this is a key time we want to hunt for fake runs. We have our levels of points of interest noted right before equity bell. So we can be hunting for that run on this support. Okay? That's what we can do. So would always happen like right after 9:30. Well, typically the quicker the sooner the better, but this is what we saw right here. We got our shift right here. It came up into, I actually didn't really like that for a short setup. I saw it had a good fall through, but I didn't really like this for a short because it came down to that 15-minute bullish imbalance. It was already fighting the trend. I just didn't like it. It had good fall through. It took out the low, but I just didn't like that for a short. I know a lot of you guys are on that right there. I didn't like it, but it did fall through. It took out the lows, but my main focus point here, I have my eyes on these old highs down here in that order block right there, discount marketplace right there. That's what we had our focus on here. And you can see price ended up selling off and it tested those levels. That was a point of interest that I had established beforehand. And now I'm simply waiting to see how price reacts off that point of interest. Okay. Now, let me see something. 15-minute. Yeah. So technically, actually, this one may have not even been one I probably should even include in this video because it didn't take out the 15-minute sell side. I'm trying to keep it strictly with the liquidity pools, like the swing lows, the swing highs, etc. And this one didn't take out any 15-minute swing low on this level, so I'm debating whether to even include it. But we were talking about this in chat, and it did give the entry signature in regards to the ICT 2022. So I'll just talk about it for the heck of it on this video. But it didn't have it didn't take that 15-minute sell side though. But it did end up giving the shift right here, as you can see. We ended up getting that let me see, yep, right there. We got that candle close right there. See that? And I believe we got the fair value gap confirmation. It's a small one, very small one, so it's definitely not a very big one, but we got the fair value gap right there, as you can see. See that? So you can see right there, we got that imbalance that was created. And then we got the strong candle close. At that point, it's valid for a buy setup, as I was talking about in chat on this particular day. And then guess what? It ramps up and it takes that high. That's your target that gets hit. You got the candle close, everything, stop beneath the low. And that's what we saw on NASDAQ. All right, now we had a really clean trade set up on Friday here on NASDAQ. Alrighty, so now at this point, we actually got that daily swing high that's put in on now it was a buy setup, but we do got that daily swing high put in on the daily chart, and the 4 hour starting to switch to bearish at this point, or it is switch to bearish at this point actually. But this was a buy setup, and I'll tell you why it was a buy setup on Friday. Okay, so all right, so we had that bullish order block that it had a reaction off of in London session right here. See this? Oh, actually, yeah, we had a setup in London on this, and we had a setup in New York. This was the first thought process, and I posted this in the Discord, the Mentorship chat. So you can see right here, we have a 4 hour bullish order. It's not the best level, but look right there, that last down close candle right there before you had that huge surge up. That's the bullish order block right there. And we had identified that, we had noted that, and that's a point of interest. And on that move lower to test that order block, we also left behind a 4 hour bullish imbalance. Why is this important information? Because that's going to serve as a draw on liquidity. Because this area, it was not efficiently delivered. It's an imbalance. It was too fast. It was too extreme. Therefore, it's an imbalance, and price is not going to, it doesn't like to leave areas imbalanced like that. It's going to want to rebalance that price action in the near future. And then we add that with the fact that we're testing a bullish order block of support. It adds for the perfect launching pad to come up and to rebalance this price action, which is what we were anticipating that it was going to do. It was already in a deep discount. It already had taken out this higher time frame sell side recently. Now we're testing this order block right here. It was just the, again, it was just really the perfect launching pad for this thing to come up to rebalance that price action. So we had the first setup on this, guys. The first setup on this was in London session. Yet again, another example of getting another setup in London session. So it absolutely, the model works in London session too. It absolutely does. We were talking about this because I believe this was on the 5-minute, though. The execution was on the 5-minute chart, if I'm not mistaken. Yep, it was. So we had this move lower, right? This is after 3 o'clock where I start hunting. And you can see right after 3 o'clock, guys, into London session, which is a key time where we want to be hunting for manipulation, it comes down and tests a higher time frame bullish order block that we just identified a moment ago in London. And we also left behind that 4-hour bearish imbalance up above, which is serving as a draw on liquidity. It's an inefficiency in price. It didn't go, it's still there. And now we're selling off into a higher time frame point of interest at a key time where we can anticipate manipulation is going to occur. A key time where Judas swings occur, where the lows are put in. We see that happening right off the bat here, and it's testing that level. So what signatures do we look for? We look for the same signatures, guys. It tests that level right there. That's a higher time frame point of interest. And yes, clearly it took out 15-minute sell side, which is what you look right here. 15-minute sell side taken out as well, right there. It takes out that low, boom. So it completes that. It checks that off the list. Go to the lower time frame. Look right here. Now we need to look for that confirmation though off that level. And what do we look for? We look for the fair value gap. And yeah, it's not the most explosive, guys, but that's kind of the deal with London session. I mean, it's a fair value gap, but you can't. And we got a little bit of a bigger one, a little bit farther up right there. Actually, you can see, but with setups in London session, you got to keep your expectations aligned because the volume's not as much. The volume's not as high in London, guys. With this forex, okay. So you're not going to get the biggest displacements, but you'll still get them, and that's what matters. So we got the displacement right there, and this is where we actually got to close above the short-term high. Look right here. Highs on the middle, lower high on the left, lower high on the right. It came up right here. Look at my cursor. We closed above that high right there. That's when it became valid, right there. So, of course, you could have just marketed into the play. And where would your target be? Well, the target that I had outlined in chat, which you can see is right here, literally, because, again, I know it kind of looks like, just go in here and cherry pick, after the fact. But I call all this, all of it. That's not me flexing. Oh, look how smart I am. I know the algorithm. Nope. It's just showing that I really do this. Am I right all the time? No, I'm not right all the time. I'm wrong plenty. I am wrong plenty. But I'm right more times than not. That's what we call an edge, right? So look right here. We have, I said, a confirmed buy set up for NQ here in London, because you can see that ISO just pointed out, there's the imbalance, there's the close above the short-term high right there, as I just told you. 3 o'clock sweep, OB support. Look for it to target the buy side liquidity above high of day. How did I establish that was going to be the objective? How did I establish that? Because that's the next key buy side liquidity pool, guys. We were just talking about a moment ago. Put yourself in the mind frame of a short who's in this. Where are they going to keep their stops at? Well, everybody basically keeps their stops at the same place, above resistance. So that means there's going to be liquidity right there. Where's the next major level of resistance? It's high of day. That quick, it's that simple. That's the next major liquidity pool. So you want to target that as like the low-hanging objective, essentially. Okay? And that's what happened. It took it out. And it even gave you a pullback into a discount. So look at the risk reward you could have got. It's phenomenal. It's over 2-to-1. I think even just on the candle close, but look right here. Pulls back into a discount. Optimal trade entry as well. Pulls back, finds support, ramps up, takes the highs. Doesn't get cleaner than that. And that was London. So yes, you'll get opportunities in London as well. It happens in London too, guys. So that's what we saw on NASDAQ right there. And we got a setup in a really clean setup in New York as well, which again, plugged in chat. So we cracked above that imbalance, and that's actually, I believe, an inverse fair value gap now, which is going to serve as support going forward. Yep, it is actually an inverse fair value gap too. So we came up, we rebounced that price action, and you can see the 4-hour close above it. So now it's actually an inverse fair value gap. So you can see that serve as support as well going forward. That's another thing, but I'm just going to remove it right now just to kind of clean up the price. So coming into London session here, coming to New York session here, I have London that already set the trend. Okay. I saw that it didn't respect that imbalance. It's an inverse fair value gap. So I'll also have that storyline to go off of in New York. So what that tells me is it wants to move higher. In simplest terms, it didn't respect that imbalance. It's still pushing up. Okay. It's not taking out any higher time frame buy side either. It wants to move higher. I can come to that conclusion. And London sets the trend for the day going forward. Not always, but in the case like this where you have nothing that's holding up price essentially, they take out any significant buy side, or let me rephrase that. It didn't have any type of respect in regards to resistance up here, then London sets the trend for the day going forward. So what did I just mark on this chart? Well, we have the 1 hour bullish imbalance right here, which is a level of support, serves as a draw beforehand. But once price comes down into it, it serves as a sensitive area because it's going to rebalance that price action. Once it rebalances that price action, it serves as support. And then I have right here a bullish order block. See these last down close candles right here? Right before you had that surge up, that's a bullish order block of support. That's not just a bullish order block. It's also an A+ bullish order block. It's A+ because it took liquidity. We have the imbalance. We have it inside the imbalance. It's in a discount marketplace. So we have that order block. We have that imbalance. And we have London setting the trend. It has that bounce off a higher time frame point of interest right here. So now I'm hunting. Now we come into New York. And we can see this thing selling off. It's selling off. And I have my eyes on this point of interest already. All right, I have my eyes on a discount marketplace right here. Okay. We take our Fibonacci from that low to that high. There's a discount. So I needed to pull back into a discount marketplace as well. Okay. I needed to pull back into a cheap. I want to see it pull back into a cheap marketplace preferably. Okay. And it does. It absolutely does. And you can see right here. And some people, they may look at this and they see this push up right here. And they might say, okay, well, so that was a failed trade setup. That was not a trade setup. That was not a trade setup. And I was talking about this with my mentees on Friday, why this was not a trade setup, because we had that third candle draw in there. And we just barely missed this imbalance right here. So there's a couple things. The third candle draw being right here. Oh, wait a second. Let me see. Yep, right there. The 1 hour chart. Because coming into 10 o'clock, highest high in the middle, lower high on the left, lower high on the right, that third candle draw right there. That was formed into 10 o'clock, and real conveniently, we got a little push up right before that was formed. Right before that was formed, that third candle draw was formed, may I remind you, right above that 1 hour imbalance, which is still serving as a draw on liquidity, right above that order block that's still serving as a draw on liquidity. Note all that because it's all important information. We had this little bounce up right here, right before 10 o'clock where that third candle draw is going to form, right above that imbalance, right above that order block. As I made very clear to my mentees on Friday, I do not trust that. I do not trust that push up right there. It's probably going to pull the rug and take out this low. That's just creating liquidity. And that's what happened. It created liquidity. It took the liquidity, that third candle draw, those equal lows as well, if you look very closely. And it drew down into the imbalance, and it drew down into the order block support right there. Look at that. Right there. Now I'm looking for the real move because now it's actually tested that point of interest. Now it's taking that liquidity. Now I'm looking for the real move higher. I'm looking for all the proper confirmation signals. I'm looking for the fair value gap. Boom. There we got it immediately. And then I'm looking for the strong close as well, right there. We get the close above the high right there, guys. It closes above it. Valid. Valid right there. And where would you target? Well, it's overall bullish, so you could target high day buy side. That was the target that I had set for it. Right there. And again, just so I'm not talking, right here. NQ confirmed buy setup, fair value gap confirmation, candle close off that self liquidity, and OB support over 2-to-1 risk reward if you're targeting that high on the candle close. And of course, if you waited for the discount marketplace, as ICT teaches in his mentorship, you had even better risk reward on it if that's what you wanted. And I'm not saying you gotta like shoot for that big like risk reward. You could just shoot for like a set, like take that low hanging objective if you want to. I like low hanging objectives, but I do this just to kind of cover all traders because you know what fits me doesn't fit somebody else. So that's the only reason why I do that. But that's what we saw, and you can see. It was like off the candle close, it was about 2-to-1 risk reward, or I think a little bit over 2-to-1 risk reward. And then, of course, take your Fibonacci from the low to the high. Where's the discount? Because this is classic ICT entry pattern. Wait for the pullback. Look right here. That's where you got it. 10-17. So it's within your kill zone as well. It's within your key time to trade. It's valid. And then guess what? You keep your stop beneath the low. You target the high. If you got in and you did that, well, then guess what? Look at that. 4.5, and you're not forcing it either. It's just there. Like literally, you saw me post that in the chat. It's just there. It's a setup. It's aligned with the trend, and this is the type of risk reward you get as well when you're aligned with the trend. When you actually trade with the trend, and you utilize like the discount marketplaces, you utilize your key points of interest, you utilize all this stuff. Look at the risk reward you have available to you if you want it. If that's the type of stuff that you want, and you like those type of deals, well then guess what? You got it. And with a 4-to-1. I mean, hell, that doesn't take much to be profitable in regards to a win rate. 2-to-1 doesn't take much to be profitable in regards to the win rate. And you get setups like this, as I've already proven in this series already, week in, week out. You get these good setups. Just go. I mean, we see it every week. Count several setups, not countless, but several setups every single week, and it provides it to you. And that's what's available to you. That was the cleanest setup that we had this week so far, no doubt about it. It ain't always that clean, but I mean, every week you'll usually get something that's like this, that's really clean like this. You'll get at least one a week that's just, you'll get more than one setup a week, but super clean like this, usually at least one a week. But yeah, guys, I think that about covers it though. So hopefully you enjoyed this video. If you did, leave a like, subscribe to the channel. I'll catch you later.